Welcome to TheMBI.com. This is John. This report is for the 15th. Had a nice little birthday over the weekend and did a little international bowling. Anyway, the market, a little bit fickle at this particular point. You had this fade back down and then the pop back up to sort of, play around with things. But the NASDAQ being, divergent from where the S&P is, well, it sort of evened out the other day when we ended up with just mostly selling. And this gets back to just the lack of direction that we don't see any new catalyst driving things, and it's a problem. The Fed cut, while helpful, is still not that helpful because it doesn't change the impetus or the dynamic of what's actually taking place within the economy. You can see from a Nasdaq standpoint, we were already weaker before, and we expected that this breakdown would continue, and you would not find support within it. So while we're holding at 50% now, um, not much likelihood that's going to maintain itself. We've already moved negative shakeout. What we'll be watching is for the extreme, a dip below the red line, and you would expect, you're going to have a much stronger. Particularly watching here will be the MBI white to magenta flip across there, and you can expect far more weakness within that. Not exactly what people were hoping for from a Santa rally, but you already had the rally, so it's just a little bit of a fillback, and a lot of it has to do with how far things have run to this point, and how much more can you bake in. That whole AI trade is starting to get a bit more scrutiny than maybe some people wanted, and it becomes a very circular thing. Each one is saying that they're going to buy from the other, back and forth. That's not really generating anything. It's just shifting money around. From a treasury standpoint, again, the expectation is that it's still going to have to do more. Oil in the right direction, but still not enough to really make an impact. And this is something we've talked about. And everyone talks about stagflation. Well, you're just sort of now in a non-inflationary block. And you still have some inflationary element because, as we talked about, that bifurcation of energy from electricity standpoint having an impact. The gains for the euro still existing because they think the U.S. economy is falling apart, and the Europeans are going to have all this new fresh money that they're going to be taking from the Russians. So that's a big windfall for them. Well, what was expected and right on target here is gold, and it should make new highs because there is no possible reason they it won't, because you are going to continue to see these massive deficits. You're going to have another budget battle coming up in a few weeks, and it's all going to start all over again. Nothing's going to be resolved from that standpoint. The continued crypto woes still exist below. Well, we expected it. We expected to move towards the 0% because MBI white spike was a matter of the breakdown of magenta. That clearly broke support and really not been too great an improvement from a shakeout. The ETH had been doing slightly better, um, but not a whole lot. It's just like right on the edge. It had a brief move up, but it had also a stronger MBI white spike, so more room for it to fade within that. And its shakeout was improved, but couldn't get to the positive. And when that happens, your breakdown is going to take you right back to that 0%. Pretty clear. So we ended up, with the MBI white spike that took place, and then sure enough, on Friday, as soon as we broke down below the 33, that was the signal that it was all going to go south, and it did just that. Not only did you break the 50%, but all the way to the zero, exactly what the white MBI lead would suggest. It was a massive move to the negative with the shakeout as well. It's improved quite a bit. You got a bit of a divergence now to the downside, where you matching lows, higher histogram reading there, as well as from the DOC standpoint. So, a little bit of a pop of it at this particular stage, but it's still going to get hit some upside resistance here as we get further on towards that 50% and around the 69.20 range. So we'll look for that when it takes place. What it looked like intraday, yeah, it was just all selling for the most part. Brief moment of turnaround, and then when we flipped into the Asian session, it was pretty rosy so far. And the Europeans not objecting either. We'll see how the peace talks go and if there's any movement there. Uh, nothing's looking all that encouraging as you see the EU is really preparing strongly for uh, global war with Russia. So just all those things are, just weighing on people's excitement level. So we'll see how it plays out and continue to follow the readings. But from an economic standpoint, we're not looking at anything turning around near term. So it's going to be months away from that taking place. As always, anything relevant, I'll put on the team chat. Have a good one. Trade well.